Hello and good evening to everybody. This is Nak from Streams, another great webinar with Streams tonight. Thank you for all joining. We're just waiting a couple of more minutes just for a few more people to join. Already a few people have joined already, but we're waiting for a few more, as I know that a lot of people did register. So we're just waiting and seeing what the markets today, general overlook of things, how the year went by for 2020, since we're near the end of 2020, has been a great year actually for a lot of traders. A lot of volatility out there, and it's been volatility that people can trade on. So just sit tight and enjoy the show, guys. So hi guys again. Thank you for being patient. We'll actually get started right now just with an overlook with the markets again. First of all, before we get started, guys, we've had a few webinars in the past. What we'll be going through today are a few things that we've learned from our previous webinars with risk management as well and money management, but also support and resistance levels and trend lines. If you guys missed out on the previous webinars, I can always send you basically the recordings of them. We do have the recordings for some of the webinars so that whoever misses out can actually follow and see a few things that they might have missed out. But today mostly we'll be also trying to create a trading plan, a trading strategy. When you get started during your day and you want to place a few trades, but even before you start your day, you should always check the markets at the beginning of the week just to see the general outlook of what's actually really happening out there. So what we're looking at here, guys, is basically an economic calendar. All right, so during the course at the beginning of the week, you should actually go through your economic calendar. We're currently using investing.com. It's one of the great economic calendars you can use. I did show this in one of my webinars on how to use an economic calendar. So today you guys can see all these are fundamental events, fundamental calculations as we call them as well. You do have, of course, your previous, your forecast and your actual. And as you guys can see, we did have a lot of news regarding Europe, UK, the US as well, especially in the afternoon. We did see quite a lot of movement in the markets, quite a lot of fluctuations as well, short fluctuations. But overall, I can say that the markets are moving in one direction this week as we see a weaker dollar. We've seen that Bitcoin as well is at record high levels. Okay, this is just the view of Bitcoin. Currently, it's at 23,000. Before it was even higher, just an hour ago, 23,500, which is a new record high for Bitcoin, but also for a lot of other instruments that we're looking at today that I'll go through. We have the pound that is actually at a record high level, hasn't been so high since 2018. We're seeing the US indices also at record high levels. The reason we're seeing these indices that are so high is because we're seeing also the dollar that's weak, which is also attracting foreign investment. And we know that the tech sector as well, guys, has boosted since we've had the pandemic. A lot of people are working from home nowadays, so a lot of new technologies and apps and programs are out at the moment that have actually boosted prices of stocks and shares, and even those indices. And we'll show a few examples as well through the chart. So today will be mostly freelancing on the charts rather than actually following slides. A lot of the webinars we do follow slides, but today this is basically a presentation where we can have an overview of the markets just to see how things turned out for 2020 and how things could go for even 2021. So the pandemic that happened at the beginning of the year, guys, was a bit unpredictable. Obviously, no one was expecting a global shutdown, a lockdown for everyone, which was very difficult. It did actually have a major impact on the markets. It's actually what moved a lot of the time the markets. And we'll go through some of those instruments right now to see them. One of my favorites that we have been seeing this week, and I have been giving out a few good signals on the pound to be rising, which I think that it could rise even more, not by much because it is overbought. We need to also be careful of some kind of a retracement reversal. At times we do see small pullbacks, small retracements, and then we see it move up again. So you can see these pullbacks. It's a matter of being cautious and not being caught in the pullback if you're buying. So I'm going to try and clean up my charts as well so you guys can see actually a bit better. I have removed some of my indicators that I am using, but we're looking at the pound currently, and we can see that we've seen quite incredible moves since the beginning of the year, starting roughly here where my line is. This is basically in January. During the course of the pandemic at the beginning, when things were announced, this was in Europe, it was during February, March, more closely to the beginning of March. We see how the pandemic did affect the British economy, but also the pound especially. And we see this big drop here. This is on a weekly chart. We saw that in 2 weeks, the pound did drop quite a lot, actually. We do see that here, actually at 1,416 pips, which is a very, very big move downwards for the pound, which this was the announcement of the first lockdown, the first wave in the UK. Ever since those first 2 weeks, okay, the pound has been gaining strength against the US dollar. This is cable pound versus the US dollar that we're looking at. We did see an uprise, and we do see a gradual uprise continuing. This uprise is mostly because of the US dollar. The US dollar at the beginning of the pandemic in Europe in March, they were not in a lockdown yet. The US were a bit late for their lockdown. And okay, we can see basically an example, say, with the US dollar Swiss franc. Here we go to a weekly chart just to see, guys, what had actually happened at the beginning of the pandemic. Here we can see that we're going into March. This is on the US dollar Swiss franc. We did see a rise for that US dollar. US dollar was considered the safe haven at the time. The US dollar was also very, very high on the US dollar index. US dollar index was actually at a record high. It did reach levels of 104, if I'm not mistaken. Which had never actually been achieved before. It was actually the first time on the US dollar index which we actually saw such a rise for the US dollar. That was in March 2020. Ever since then, we've actually seen a gradual downward move for the US dollar. Go back to the US dollar Swiss franc. So over here, we see this was March. This was basically those 2 weeks when we saw the pound tank. Then we saw the US dollar rise, but this movement upwards for the US dollar was very short-lived. During the course of its downward move, we did see other major currencies rise, like the euro, the pound. We saw the Swiss franc also gain. This is US dollar versus the Swiss franc, the Swissy as we call it. We saw that the Swiss franc, safe haven of all currencies, had a good performance against the US dollar. We saw the US dollar against the Swiss franc coming down. This is signifying that the US dollar is weakening. At the same time, the Swiss franc is strengthening. Now, there's a strong correlation between gold and the US dollar. There's a strong correlation between certain currencies like USD, Swiss franc, Australian dollar versus the US dollar, and the USD CAD, US dollar CAD. Usually when you see the US dollar weakening against these three currencies, you usually see gold on a rise. And we did see record high levels for gold. This is gold, guys. So just giving you a general glimpse of how gold moved. This is on a weekly chart. And we can see that at the beginning of the pandemic, especially in Europe again in March, right over here, this was the 8th of March. Okay, this was the announcement of the lockdown, I think, in the UK. The US dollar was strengthening, brought down the gold as the US dollar was strengthening. And then once the US dollar started weakening, we saw a rise for gold. We saw record high levels for gold right over here. We've never seen gold at these levels before. Bear with me one moment here. So gold, we saw it did actually touch the levels of near 21,000. It was at 20,070, which was its highest. And we've never seen this actually before. It's actually amazing to see such a very big move, which, you know, no one was expecting to see gold to go above the 2000s. So we see it 22,000 on the ounce. Very big move for gold as the US dollar has been weakening. Now, US dollar is very weak. This is the US dollar index as we see it for today. We've seen these last few days downward move. This week has been terrible for the US dollar, where we're seeing some improvement in Europe, some improvement in the UK, especially in the UK. Now they've announced the vaccine, distributing the vaccine. They've approved it in the UK for people to start taking it, and it has been distributed. And I think Tuesday was the first day for the vaccine, for people to start taking the vaccine. So it's been very good news for the UK, and it's had an impact on the UK, the British pound. As I understand, they do have issues with delivering goods and services. Their ports are on a lockdown. A lot of the things in the UK are not moving, but impressively enough, this news with the vaccine, we've seen that it has boosted that British pound against the dollar and against a lot of other major currencies. As we can see, this is the pound versus the Japanese yen. Okay, so I am using a few moving averages. I will be covering moving averages soon in one of my webinars. It will be good for people to understand how moving averages work. We'll be covering a few things on the RSI and other indicators that are helpful, like Bollinger Bands and of course stochastics. But for now, we'll try and keep it simple, guys, so that everyone can follow. So going back to our economic calendar, today I did give a few signals out during the course of the day. Those signals were good until we saw some news come out for the US dollar. It came out quite mixed up fundamentals that came out for the US economy. It did first of all help the US dollar, and then it just brought it down as we did see some poor results. So using an economic calendar is very important. As I mentioned at the beginning, when you're going to start trading, you always need to be in a relaxed state of mind. You always should be aware of during the course of the week what can occur. So you go to your economic calendars on a Monday morning, or even better on a Sunday, and you just check a glimpse just to see the important calculations that occur. The ones that have 3 stars are of more importance, where they do have a more they have more of an impact on the economies, which in turn have more an influence on the specific currency of that economy. So I will send you again those webinars who hasn't actually gone over how to use an economic calendar. It is one of the most important things, as it does change sometimes the direction of how things are moving. So today we did have also very important news for the UK with interest rates that came out at a constant 0.10%, no change for them. But we do see that there is some improvement in this calculation, which might have helped, of course. But overall, the UK seems that they're doing good. I mean, there's optimism for the British economy with this vaccine that has been distributed, but we still have to see how things turn out with people after using the vaccine. So once you've actually seen the economic calendar and understand what are the important fundamentals to look out for, you can know what time they're occurring, and if you have any trades, you can either try and close those trades before that big announcement that's coming out that has 3 stars usually, or if you want to keep your trade open, do make sure that you put your stop loss level just in case things do go in the wrong direction. You can actually protect your account. I tell people always to try not to be too exposed, especially when there's a lot of news like today. Having too many trades open with big lots and having a low margin can actually be very destructive for accounts. So it's because the markets have been volatile for 2020, I've told everybody that you don't need to be using big lots. The lots always are in accordance to what your equity is. Using even those small lots can gain you a lot of value, because the moves that occur now in the markets are usually big moves because of the different news events that come out, different things regarding the pandemic, and how things are gradually performing, how companies are performing in general, which has been good for some companies. Obviously, it's not all gloomy out there. But also looking at some indices really fast, we can see the tech index of the US, the NASDAQ, which comprises mostly of companies, tech companies and logistic companies. The NASDAQ, which we've seen, has been on record high levels. As we can see here, this big rise over the years. Basically, we can see even going further all the way to 2013 on how things have been moving for the NASDAQ. NASDAQ has been rising a lot and a fast direction for 2020. We can see it right over here. Let's go into a weekly. We can see here, again, a big drop. This was during end of February, March, announcement of the lockdowns in a lot of major areas, such as in Europe and in US. Again, the US was a bit late to react, but as you can see, once the lockdown was in effect, we can actually see a rise for, of course, the NASDAQ, which all these tech companies were profiting, like Microsoft and Apple and TikTok and you name it. any company that that is on the exchange is actually doing quite well. Alibaba, Amazon, eBay, all of these massive companies with their delivery systems. And don't forget that the NASDAQ also comprises of logistic companies. So we've seen a massive rise for the tech industry, for the tech index, the NASDAQ. And we can also see it also for the Dow Jones, the Dow 30 as we know it as well. We did see a nice drop first at the beginning. As you can see, as I did mention, the US was a bit late to react to the lockdown. And we could see that as things were moving down for the Dow Jones during the announcements of lockdowns, moved down to a very low level and then started rising again. Just the same with the tech companies. Usually the Dow and the NASDAQ do move similarly. We can see it here on the weekly chart. And here also, again, you can see that there's some similarity. on how things move, and even for the S&P 500, which is a bigger index. Okay, the S&P 500, Standard & Poor's 500 index, obviously there has been a bit more volatility, I could say, on this, a few more fluctuations, because it does comprise of 500 of the major companies in the US, where the Dow is 30 and the Nasdaq is only 100. So you'll see much more fluctuations in the S&P 500. But going back to the pound, you can see that there is a there, and what we can do is maybe give an example on how to draw some charts, some trend lines, so that we can get a better understanding on this great move for the pound. But as I mentioned, this upward move, we need to be careful because it is overbought. When something is overbought, usually traders try and find the opportunity where they might start selling. This is because everyone has exhausted that buying option. People start looking for some kind of pullback, and looking at things now with the pound, how they are. Okay, there is more room for it to rise. I believe that we can see it. It has risen to 136, which is actually quite impressive. This has only been in a short duration of time that we've seen such a big rise of the pound against the US dollar. And I believe that maybe we could see it a bit more to rise. There is a resistance level, a ceiling here that has been drawn. This is in accordance of 2 points on a 15-minute chart. So when you guys are trading, you have to look every day at your economic calendar, and we can actually check for tomorrow to see what news there is. Okay. So do make sure that you do put the time that you're currently on. And tomorrow we do see that there is big news for the British pound, for the British economy, core retail sales. If you want to see more information regarding each fundamental event, you just need to click. Basically, we'll check out the German info business climate, which is also a very important one. Germany, this will definitely influence the euro, but you just need to open a new page and you can actually read what exactly is the specific calculation. And this calculation, the German Info Business Climate Index, is basically one that shows economic activity. It shows how things are in Germany at the moment, and you can actually see the history of this fundamental event going back to 2016. As we can see here, Germany was doing very well in recent years. During the pandemic, we see a slowdown in activity, but this hasn't had a major impact on the euro. We've actually seen the euro that has gained quite a bit against the US dollar, but do remember that this is all because of the US dollar weakening. It's not because things are very good in Europe, but mostly it's because of the US dollar weakening that we see that rise in the euro. But continuing, we can see that there are a lot of major news events coming out. The ones with 3 stars are important. The ones with 2 stars are moderate. They have a moderate volatility impact on the markets. And 1 star has a low volatility impact on the markets. So usually Fridays, there is a few fluctuations, a few uncertain moves usually on Friday. This is because major brokers, major banks do try and close their positions before the end of the week. They don't want to hold on to their positions during the weekend. A lot of traders, professional traders, prefer to close their trades on a Friday evening if they can. Try not to hold trades over the weekend, because usually when Sunday evening comes or Monday morning, you usually see the market open with gaps. Those gaps can actually influence your trade either positively or negatively. But again, it's taking a risk, it's taking a gamble basically, because the gap can be against you or in your favor. If it's in your favor, then you've earned, luckily, a good amount of pips. But if it's against you, there where your trade is profiting can actually give you a loss. So looking at your economic calendar, you do go through your charts. And when looking at your charts, it's very important to see how things have been moving over a general outlook. like what we've seen here with the British pound USD. I'm specifying the pound USD because it has been great for the British economy as currency, not so good for the British economy with employment figures. There has been an increase, of course, of people receiving benefits. Companies are struggling, but at the same time, this rise that we've seen these last few weeks is because of mostly that there's hope for a better tomorrow with this vaccine. So looking at a general overlook, you can see that the pound has been on a nice rise since March, and going into the year 2021, we can see it probably continuing, but again, do be aware that it is near the overbought on the general outlook, which is a weekly and daily chart. And once you do have a good understanding on how the trend is moving, and we can see that there's a nice uptrend here, you can even bring your line further down like this, get a better understanding. So we can see that upward move, this trend line that we've just drawn. Okay, anyone can draw it, you just need to connect the low points, basically, which create a support level. This support level, as you can see, was tested even a few times, started from here, was tested over here and rose, was tested a second time, rose a bit, tested a fourth time and rose again. And even here we can see that it nearly tested this level, the support level that we've just completed. And there has been a rise. Now, these levels here, the red ones, we can see that have been drawn. They're actually resistance levels most of the time, and they have been broken. So the next high level that we see is at 136.23. If this level is broken, then we can actually see it rise to even higher levels. But it is a crucial time for the British pound versus the US dollar because it is very high. It's the highest since it's been since 2018, as I mentioned before. This is why we're focusing on the pound. Maybe we'll see it again rise to levels of 140 and 141 and 144, as we've seen in the past. That was in 2018, again in April. Let's see if it will manage to reach those high levels of 140, 142. Once we're seeing the overview of the pound, okay, it's wise not to try and trade too much against the overall trend, as we say. We try and follow the trend, and this is because we can see from our analysis, if you're using indicators, some of you guys will realize that there's more room for it to move upwards, but that room that's moving upwards is starting to be limited for the pound. So moving to lower time frames, a 4-hour chart is showing to me that it is on the 70 level on the RSI, which does mean that it's overbought. It can go higher than 70 level. It can even go to 80 levels, as we've seen in the past over here. Okay, this 80 level is a sign that it's overbought, so it could rise even higher. Once looking at your 4-hour chart, it's wise then to move to the shorter time frames or also shorter time trading, where a lot of the signals that I do give out to everyone, it's mostly based on the general outlook and our hourly chart. So when you're calculating what time frames you want to trade on, when you're opening your trade, you should calculate that if you're trading on a 1 hour or any time frame, you need to multiply that trade roughly about 3 to 5 hours that it should be running. So if you're opening, say, for example, on a 1 hour charted trade, because of your analysis that you've conducted, then you need to estimate that in around 3 to 5 hours, you should try and get out of that trade due to that things may change. And especially if on your economic calendar, you've seen that there's some kind of big fundamental event or calculation coming out, you should be prepared to try and get out of it before that calculation comes out, and especially before those 5 hours are gone by. So looking on a 1 hour chart again here, we do see levels of overbought. Okay, RSI, as I mentioned, guys, I will be covering it more in depth. A lot of people do already know how to use it. As you can see here at the 80 level that was reached just a while ago, we did see a bit of a drop during this time. I believe that there was also some kind of news that came out for, I think, the US. Just go ahead and check. Or sorry, for the UK, my apologies. There was some news for the British economy. So let me just close this. So you guys can see, yeah, this was at the time when the interest rates came out. They were kept constant. It did give a bit of a drop, as we can see right over here, for the British pound versus the US dollar. So this drop was, of course, occurred during the news. And again, we can see that there's also this resistance level, this high level that has been tested once already, came down. Here's another time that it's been tested a second time. So this support level, this red line, is not completely strong unless we have 3 points where the rate tests this level. Third point would confirm that it is a strong level. And you guys can see that on the shorter time frames, it's having a hard time cracking this level. And you can see that sometimes it's going up and then coming down. This is a strong level for the British pound versus the US dollar, the cable. It does require a bit of attention. So taking a buy now, okay, this again, taking a buy, you would need to put your stop loss, obviously, because things can turn around very, very easily because it is overbought. Looking on a 15-minute chart, this is where we get a bit more focused. With a 15-minute chart and the lower time frames, you should try and find good entry levels, good execution points to open your trade. We shouldn't be basing our direction on the shorter time frames like 5 minutes and 1 minute charts. 1 minute and 5 minute charts should be mostly on when should you take that trade. And the longer time frame should actually try and give you a good direction. And at the moment, that direction, as we can see, that upward move is still strong and there's more space for it to move further up. But entering now a trade, you would actually rather wait so that it can actually drop a bit and then take a trade. Like over here, we can see that there was a nice drop here. This is on a 5-minute chart. Here, if you took a trade on a buy, this would be a good level on a buy. Of course, you would take a buy and put your stop losses because it could have continued further down. You just need to try and estimate where is a good level. And this is a good level if you see this point here. Yeah, you have a point right over here somewhere. We can see that it's looking that it wants to go up, but it's struggling to go further up. So in general, guys, we need to look at the general overview first. You need to look at your economic calendars when you're trading. And when you want to place your trade, you need to focus and see where you have good support and resistance levels. We can draw maybe some of those levels right now. So you can see right over here is a strong level here, but it's not connected correctly. So we just adjust it. Okay, so this is on a 15-minute chart. It's a shorter time frame. So here we have a nice level. So a support level. And the top one is the resistance level. So we can see a bit of ranging, as we call it, consolidation. We see that upward move, then comes down, upward move. Tried to come down, but didn't manage. It's trying to break again this strong resistance that we have. If it doesn't break it, it'll come down. This is a very strong support level here that we've drawn manually. And you can draw levels in different ways when you're trading. You can even use Fibonacci retracement levels. This is what we call Fibonacci. These are normal support and resistance levels. We can zoom out and find even more levels on a 1 hour. Even though we can see that the overall trend is strong upwards, you can still draw some kind of levels that will signify the support and resistance levels. But if things are not too clear, what you can do is actually draw a Fibo levels, which, let me just clear everything out, or we can leave them so that you guys can see similarities of the levels that I have. So a lot of these levels are drawn on daily charts and on hourly charts. I'm going to leave this on a daily chart and draw my Fibonacci retracement level really fast. Okay, so drawing the Fibonacci, it's basically taking the highest point to the lowest point can draw it from here. Up. Okay. So I need to change the color of that. Okay, so I've made them blue so they can separate from the red ones. We'll zoom in so that you guys can see some of the levels are close to each other. Okay, so we've drawn our Fibonacci retracement levels. They do act as support and resistance levels. As you can see, this blue line did not quite match my red, obviously. The Fibonacci's are quite accurate, but overall they will work as support levels for you guys. At the moment, it's broken quite a few of these levels from before. You can just zoom out now. Again, you can see that it did break quite a few levels moving upwards. At the moment, if it breaks this level, it can go even higher to other levels that will occur very soon, but it will have a very hard time to break the high levels of 136.23, I believe. We'll have to wait and see tomorrow what comes out for the retail sales at 9 o'clock my time. Okay, so I'm on GMT +2 tomorrow when you can. This is today, so tomorrow news that is coming out in the morning, the core retail sales and the retail sales for the UK will have an impact on the movement of the pound versus the US dollar tomorrow. And we do see a lot of news with Europe, with Germany, especially with Germany, which is the strongest economy in Europe. And later on in the afternoon, things will slow down, obviously, during the evening, but okay, slow down with the fundamentals, but I believe the charts, there will be volatility due to that. Remember, I told you guys that a lot of brokerages, banks, big investors, professional traders, they usually try and close their trades, and this does kind of cause big movements in the markets. So that was it for today, guys. All right, this was just a general outlook for the economies and for how things are moving. Nasdaq as well, guys, is quite high. We need to be careful as well. Things for a lot of instruments out there are at high levels. Even gold, I could say, is still at a high level. Gold is still at 1884, which these kind of levels of 1884 we've had maybe in 2011, the last time I saw them, and we saw for 2020 the high level of 2150, which was incredible. So do keep an eye out on the markets, guys. Do follow your economic calendars, and do make sure to be cautious when something is very high, because they can turn around and go in the other direction at any time. So any questions you may have, guys, do email me. Do send me an email at webinars@gostreams.io, or just email me personally. I can answer any questions. Yeah, we can have a conversation regarding what we've just seen. So thank you for your time, guys, and I hope to see you at the next webinar. Take care.